welcome back to my YouTube channel. It is your boy El Bichote de los Graficos. Today I'm going to be showing you all how to properly identify market structure. So market structure, right, before we get into it, why it's important is because think about it this way. In order for you to become like a profitable trader, to spot those high probability trades that, provide a lot of reward and low risk, you need to be able to know the lay of the land when it comes to the markets. So with that being said, you need to be able to determine whether the market is trending upwards in a bullish manner, whether it's trending downwards in a bearish manner, or whether the market is consolidating and ranging from side to side. All those things are super highly important, and I will be able to show you guys that here within a few minutes as we get further in the video. But lastly, also what I do want to mention is some things that have helped me as a trader to become very profitable is learning how to become somewhat of a naked trader. And with that, what I mean by that is not relying heavily on indicators, and also not trying to focus specifically on chart patterns or candlestick patterns. Although I do highly recommend that you actually learn the candlesticks, right? You should be able to read the candlestick, know what's going on, know who's in control, whether buyers or sellers. But what I don't want you to focus on is waiting for specific candlestick patterns. Like, don't be specifically waiting for a doji or a morning star or even an evening star before you feel confident to take a trade. It all depends on context, and context is key when it comes to trading, because the same type of chart patterns or candlestick patterns, they may play out, but depending where the market is within present time, could mean totally different things. If market is sitting at support, sitting at resistance, if it's sitting at a significant Fibonacci level, if it's sitting at an institutional candle level, right? Like, these are all those type of things that you need to properly be able to identify market structure. That way you can take all this in consideration and then be able to feel confident in your trading. So without further ado, mi gente, no se me despeguen, and we'll go ahead and get into them charts. No fuimos. All right, family. So today we're going to be looking at the chart of GBP AUD, Great Britain pound versus Australian dollar. All right, so I'm going to start with the downtrend. First, I'm going to show you guys the criteria that you should be looking for in the downtrend, and then I'll go ahead and show you guys how to actively do that. But first, for the criteria, if it's an active and ongoing downtrend, you guys want to see a series of lower swing lows, lower lows, and also a series of lower swing highs, lower highs. When the downtrend is ending, you want to see that price has rallied or rose above and closed above the most recent swing high. And I'll show you guys how to determine that a little bit later as well. All right, so now let's go ahead and start marking up swing highs and swing lows. So as you can see, I've already started out with the starting point here, the highest high, and I've also put, detailed out the lowest low or ending point. So now we're going to go ahead and pull out our text tool so we can start labeling, the different swing highs, swing lows. So right here, this is our, our first swing low, or lower low. Let me go ahead and fix my settings here. Okay. Now we're going to go ahead and move on to the swing high. This is our lowest high, because as you guys can see, it's a high that's lower than the previous starting point. So this is our lower high. Then now I'm just going to go ahead and quickly copy these and label out the remaining swing highs and swing lows of this trend. All right, so sometimes, as you'll see, when you're labeling lower highs and lower lows, sometimes you'll have multiple points. I usually don't mark every single point that I see, because I usually go for the most outer or the most extreme, and then, I label that as my lower high or lower low, and then I typically don't label anything further unless if the market passes those points. All right, so I'm going to show you guys, signs of when to know that, the downtrend is either ended or is coming to an end. One of the first easiest ways is to use the trend line. So as you can see, I started grabbing the trend line. I placed it at the top or the highest high, and then I dragged it down to the next lowest high, and then pulled it all the way through. So as you can see, when price is under this trend line or it's respecting it, or you can otherwise assume the downtrend is still in motion as long as price is still below it. However, once it closes above and breaks past that trend line, that's when you know that there's a change in direction or a change in momentum. So that's your first way to be able to spot if the downtrend is ending. All right, the next sign is a break of structure. So as you guys can see, I've found the most recent lower high, or most relative lower high, and then I just grabbed that same trend line tool, and then I drew out a straight horizontal line. So what this represents is a break in structure. So kind of same thing with the trend line, as long as price is still below that trend line, and it's making lower lows, lower highs, it's considered to still be in a downtrend. But the moment that you see price break above and close above, that trend line, it's considered a break of structure. So kind of the same thing, it means a change in direction or a change in momentum. So once that happens, it's very significant, so if you were previously looking for selling opportunities, which, in a downtrend are more highly favorable than, buy positions, that's when you would change your train of thought. So now once you see this break of structure, price literally made a swing high or higher high, which kind of invalidated the previous downtrend structure. So now from this point forward, you have to switch your bias. And if you're looking for higher probability trades, now you need to start looking for buying opportunities. All right, family. So now that we've already covered downtrends, let's go ahead and move on to uptrends. So the criteria for an active or ongoing uptrend is as follows. You want to be seeing the market make a series of higher swing lows or higher lows, and also a series of higher swing highs, higher highs. As far as to know when the uptrend is ending or has come to an end, you want to, be very cognizant and wait for the market to sell off and close below the most recent higher swing low or higher low. And I'll show you guys that as well. All right, so I'm gonna go ahead and show you guys how to put this in motion. Go ahead and put this in practice. So we're gonna start marking up the different higher highs and the higher lows that we can see. And also, as you guys can see, I also listed out the starting point below where it says higher low starting point, and then I also listed out the ending point where it says higher high ending point. But as you guys can see, I'm just going ahead and marking up the different swing highs and swing lows. Also, like I mentioned previously, like when you have an area that has a bunch of different, points, or swings, I should say, within one area, you can go ahead and draw a trend line, kind of like I just did right there by that higher low, where to me, I pretty much don't draw another higher low, unless if it goes above that line. If it breaks that line, then I know that, there's going to be a potential change in the trend. All right, so as far as knowing when, to be looking for potential reversals or to know when the market may be changing direction, I'll go ahead and show you guys that as well. So as you can see, I forgot to, list out this last higher low, and this is very relevant because just look where it's positioned. So I'm gonna go ahead and draw a trend line right here as well. All right, so the first sign to know when the market is changing directions, if price pulls back and closes below this most recent higher low that I just wrote down there, that's like your first sign to know that, you should potentially be looking for sales, like the market may not continue in this bullish manner. As like I mentioned, break of structure. There's also another way, kind of like I showed with the downtrend, you can use a trend line. So pretty much go ahead and just mark up the different points, in the uptrend, every time it touches that line, and then kind of like similar to the downtrend, once price breaks below that trend line, that's also your secondary sign to know that the market is, for sure gonna potentially change directions and you might need to start looking for sells. All right, family. So next up, and one also super key component of market structure, is consolidation or trading ranges. These you should get very familiar with because they're a normal part of the price cycle, and they literally happen before a trend, during a trend, and even after a trend. They also serve specific purposes, whether that be accumulation, as far as professional traders trying to acquire better, more favorable buying positions at lower prices, or whether that be distribution, where it's the opposite, where professional traders are offloading previously acquired buy positions, taking their profits, while at the same time trying to acquire selling positions at more favorable selling rates or as high as they can in order to drive the market downward. So let's go ahead and get into that. I'll show you guys how to look for these. All right, so as far as identifying consolidation or trading ranges, there are many different ways you can do this. Some of the ways that I've found for me that have worked is if I look back in the past to the left and try to find previous support and resistance, sometimes I've found that, consolidation or trading ranges, typically tend to form around one or the other. As you guys can see, I had to switch the chart on this one. I used the US 30 or Wall Street 30. All right, so as you guys can see, so I'm looking to the left, or looking to the past to look at previous price action, and I'm doing that as far as being able to locate support zones or resistance zones that may become relevant or become important to us here in the future. And as you guys can see, I've done that detailed out within my yellow drawing tool. I found a previous resistance that turned into support. Then I also found a new resistance zone, and as you guys can see, each time that price is literally touched these zones, it literally is turned away. So that's literally the perfect definition of consolidation or trading within a range. So for instance, each time you see price reach that resistance zone, well, you should be looking to sell, because as you guys can see, every single time that blue line has touched that yellow resistance zone, price literally turned away and went the opposite direction. And there was multiple touches there, and vice versa. As you guys can see, when price hit that support zone, literally it turned away and bounced straight back up. So when you're trading within a range, you want to have that mentality of like selling at resistance, buying at support. And then when to change that is when you see a break of structure, like I just listed here. You see price broke down below, so that's when you stop that and you start looking for sales in this case, since it broke down to the downside.